Wow, then I don't know who that guy is, and maybe I should know, but he got a huge ovation there. Welcome back, folks. Joining us now for the daily closing bell report is Jeff Yastine, Newsmax Editorial Director of Financial Newsletters. And Jeff, a lot of applause, but there's always a lot of applause for the closing bell ringer. How did we do today after a bunch of really bad down days?
Yeah, I suppose compared to the last handful of days, better than those, but still we finished down in the red. The Dow Jones Industrial Average lost 38 points. The S&P lost nearly 5, and the Nasdaq dropped almost 11. So again, compared to the last 3 days of this week, better, but we're still finishing down for the day.
All right, now because of, if I'm not mistaken, activity in the Middle East, and I'm talking about military activity, oil did cross $50 a barrel again? Yes,
overnight it hit as high as $52 a barrel. We're talking about Texas light sweet crude, the U.S. standard, based on the situation in Yemen, the Egyptians and the Saudis mounting operations and planning operations to push the Houthi rebels out. But what's interesting is that there are some calls now in the trading community saying, hey, it looks like the price of oil has bottomed, and they expect it to move higher. At the same time, you've got like the British investment bank Barclays. They came out and said, hey, hold on a second, it is not going higher here, and they expect to see yet lower lows for oil coming up in the next couple of 3 months through the midpoint of the year. They say there's still just too much oil coming out of the fields in the United States in terms of just that feeding into that glut and oversupply of oil. And until you get more rigs offline and the broader economy starts to pick up a bit, you're still going to have just way too much oil to support higher prices.
Yeah, because whenever they release those statistics about supply and even storage, there's nowhere to store the oil in this country anymore. Let's talk about something we don't talk about too often, and that's Treasury bonds and U.S. Treasury bonds, and how they're really not an item of choice right now in this country. Haven't been for some time because of interest rates. But talk about what they're doing overseas and why that's important.
As I know you guys have talked about before, foreign governments, China, Japan, South Korea, major exporting countries are huge buyers of United States Treasury bonds and Treasury notes. What's interesting is that those holdings, in essence, topped out in 2013, and over the last number of months especially, we've been watching a lot of the holdings and the level of buying tick down to now it's around $2.9 trillion. That's according to Federal Reserve data. And what it shows is there's just not an appetite for that. And that could have longer term implications going forward here, both for the strength of the dollar, which we've talked about before,
right,
as well as higher interest rates at some point down the road if this trend keeps going. Because in bond land, when prices are high for a bond, the interest rate is lower. Likewise, if the price moves lower, the interest rate moves higher.
Right. All right. But very quickly, Germany and Spain, there's some news out of those two countries about economic outlook and consumer confidence. Why is that important?
It's important because we've heard a lot about how the European economy is really beaten up. And in Germany, they have consumer confidence that hit some fairly new highs, the highest since 2001. So it shows consumers there are starting to wake up. And usually that means better things for those economies down the road, especially as we get the quantitative easing from the European Central Bank.
All right, very, very interesting. Jeff, thank you as always. We'll speak to you tomorrow. Hope there's a bunch of green to talk about. And folks, you can find out more on the financial news every day, every moment of every day, by going to Newsmax.com and clicking the finance button. It's at the very top of the page, and there it is. There you see it right there, Newsmax Finance. But go to Newsmax.com and click that finance button. You'll be glad you did. Give Me 5 is next. Don't go away.